If you're thinking about buying or selling a home, it is extremely important that you understand the contingencies in the transaction. A contingency is a clause in the contract that allows either the buyer or the seller to cancel the agreement based on certain criteria or events. Most contingencies are designed to protect the buyer, but there can also be contingencies to protect the seller. I'm Tim Hamilton with StellarQuest Real Estate, and in this video we're going to talk about the most common contingencies in a real estate transaction here in Southern California. If you want to learn more about buying and selling homes, please subscribe to our YouTube channel where we have a lot more videos on a variety of topics. Before we start talking about specific contingencies, I wanted to give you a quick background on how contingencies work in a real estate transaction here in California. A contingency lasts for a certain number of days from when the contract is executed. The contingency is not removed automatically, it must be removed in writing. So let's say we have a buyer that has run to the end of their contingency period and they haven't removed their contingency yet. That contingency continues until either the buyer removes it in writing or the seller cancels the agreement. In order for the seller to cancel the agreement, they would first need to issue what's called a notice to perform to the buyer. This gives the buyer a certain number of days, which is normally 2 days, to either remove their contingency or cancel the transaction. If the buyer hasn't removed their contingency within this time period, the seller now has the right to cancel the deal. The first common contingency is the buyer's inspection contingency. This gives the buyer a certain number of days to inspect the home or hire professionals to inspect the home on their behalf. It also gives them a chance to review all of the disclosures and reports provided by the seller. If an issue is discovered, the buyer then has the opportunity to submit a request for repairs to the seller. In the request for repairs, they can ask the seller to either provide a closing cost credit, make specific repairs to the home, or lower the purchase price. If an agreement can't be reached or the issue discovered is so large that the buyer no longer wants to purchase the home, then they can cancel the transaction according to their inspection contingency. If you want to look over a list of some of the possible inspections you can have on a home, please let us know and we're more than happy to send you a great form put together by the California Association of Realtors. The next common contingency is the appraisal contingency, which is most common when the buyer is financing the home with a mortgage because the lender will typically require it for the loan. An appraisal report is put together by a licensed professional and is their determination of the home's value. If the appraisal comes in at or above the purchase price, then there are no issues and the transaction can move forward. If the appraisal comes in below the purchase price, then the difference in value will have to be reconciled. The buyer can either bring in more cash to make up the difference or attempt to renegotiate with the seller. If either of these things don't work out, then the buyer has the right to cancel the agreement according to their appraisal contingency. The final common contingency is the loan contingency, which would only apply if the buyer is financing the home. The buyer agrees to act in good faith to obtain financing. If the buyer does not qualify for the loan based on a legitimate reason, then they can cancel the transaction according to their loan contingency. The California Association of Realtors Residential Purchase Agreement does state that the buyer's contractual obligations for the deposit, down payment, and ability to pay closing costs are not included in this contingency. The purchase can also be contingent on the buyer selling their current home. In some cases, the buyer will need to use the equity in their current home as the down payment for the purchase of their replacement home. This means they cannot successfully close escrow on the purchase until they get their current home sold. In this circumstance, we could add a contingency into the deal that would allow the buyer to cancel the purchase of their replacement home if they are unable to get their current home sold. On the other side, the seller may only want to sell their home if they can find and close escrow on a replacement home. In this circumstance, we can add a contingency that allows the seller to cancel the sale of their current home if they cannot successfully purchase their replacement home. This contingency can be extremely useful when the market is competitive and finding the replacement home might be difficult. That wraps up our discussion of the common real estate contingencies. The information in this video should simply be used for educational purposes and is not intended to be legal advice. If you're thinking about buying or selling a home in Southern California, please feel free to let us know. We're happy to answer any of your questions and let you know what we can do to help. To stay up to date on the housing market and to learn about a variety of real estate related topics, please subscribe to our YouTube channel.